Welcome to the Daily Brief, where we'll go over the highlights in the market for Wednesday, October 26th, and then just give a brief overview of how things look for Thursday, October 27th. And before I start, you might hear some background noise. There's a lot of things going on. I've tried to get to a quieter place, but still it doesn't keep all the noise at bay. There, you can hear some right now, possibly. Just think of it as my own rhythm section, just to kind of help you dance through this particular video. So let's go back and talk about what happened. We had a down day with the S&P, but the small caps held up, the mid caps held up, the Dow was virtually unchanged. A lot of that's being blamed on Boeing, Microsoft, and Google because they had pretty disappointing earnings reports. So at the open, we had a lower open, and we opened below the daily pivot at 38.40. As the day went on, prices rebounded, and this is where we saw some new bullish percent index signals. We saw some new highs being generated. We went positive and got up to R1 at 38.81. That was the most positive part of the day, but we couldn't keep on to that. Prices ended up declining. They went negative and actually dropped below the daily pivot. And going into the close, we were down 0.74%. Kind of not a real drastic pullback at this point, but we have GDP coming out, the first report for the third quarter. We have the PCE report coming out on Friday. These are heavy duty economic reports, and they're going to have some impact on market sentiment. But that could change the overall situation. But right now, the pullback that we saw in Wednesday's session was more or less because we had hit overhead resistance. We're pulling back from that. On a short-term basis, we're overbought. And on a long-term basis, we're still trying to work off some oversold indicators. So there is a chance that things could improve, but we're going to need to see a strengthening of volume of buying to really push us through that resistance that we're dealing with. Volume was back to being above average. The technicals, they're turning more positive, and I'm still going with the more positive scenario currently. But inflation and interest rates, that's the real fixation. We have the whole list of things, the midterm elections, earnings, and all of that. And any one of those could come to the forefront, especially the Russia-Ukraine situation that could be escalating. So what are some comments that we can make? Boeing, Microsoft, and Google had disappointing earnings reports, but interest rates still declined. That's another thing in the background that has been giving some support to stocks. I don't have it on here, but the dollar also declined, and that's giving some support as well. And this scenario that the Fed's going to go ahead and raise rates at the meeting on November 2nd, and then possibly look at a lower rate increase in December, that's still holding up for right now. Now, there's a long time and a lot of things that could happen between now and then, but that's right now what the market is going with. Even though we had a decline with the S&P, the small caps and the mid caps still held up fairly well. They actually were up. And we have the 10 to the 5, 10 to the 2. The 10 to the 3 month is now back to being inverted. And the 30 to the 5, which was not inverted yesterday, has gone back to being inverted today. Sentiment is, we're out of the neutral area and we're getting slightly into the greed side. So we tend to follow that. If that's more positive. When we use this as a contrary indicator is when we get really extreme positive or extreme negative readings. We had the weekly MBA mortgage applications index that continues to decline, not as much as last week when we saw it go down 4.5%. It's still declined down 1.7%. And the international trade in goods, the last time we got this report, it was at 87.3 billion. Now it's down 92.2 billion. And the inventories declined a little bit, where they had been down 1.4%. Now they're down 0.4%. That's actually kind of positive news there. That means things are going off the shelves. Wholesale inventories also declined. Last time it was 1.4%. This time it was 0.8%. New home sales, even though it was greater than expected, we still saw a decline. So last time it was 677,000. They expected it to be 575,000. It came in greater than that at 603,000, but still a decline. The trend is positive. The green line has switched over the red line, but it is weakening because those two lines are pretty close to each other. We're below the moving average, but the ADS itself is still above 20. I'm keeping our bias at mixed right now, even though we had a down day for the S&P, because the other indexes held up better, not the NASDAQ 100 and the NASDAQ, but the small caps, the mid caps, and the Dow were a little bit better. And I'm keeping our momentum at positive for right now. So what's our outlook? The technicals. We saw a decline after being overbought, specifically in the short term, and then hitting resistance. We have the advanced GDP coming out. That's the biggie for Thursday, and weekly jobless claims and durable goods. And then the whole list of geopolitical events. Now, any one of these could come to the forefront, but the markets, at least for Thursday and Friday session, there goes part of my rhythm section again. At least for now, it's still inflation and interest rates, if I said that before. So our scenarios, we can't really go with the down scenario. Things are shifting over more positive, but we have a lot of headwinds here that could take things lower. The technicals, they're trying to stay positive after being short-term overbought and hitting resistance. So right now, they're still holding up. And that's kind of the same thing for the positive scenario. And our scenarios that we look at, like the sector rotation, not really helping us right now. Our setups, some are showing some improvement, some haven't changed, and some are actually showing some weakness after Wednesday's session. And then the technicals, they're looking better. We're still above the 20 period moving averages. We're right in between the simple and exponential moving averages on the 50, but we need to recapture a lot more than that. We're still holding on to previous fib retracement levels, and some of those are acting as resistance. And if we go down, some of those may act as support. And it's hard to go with the sideways right now because the ADX is above 20 and it is positive, even though it's weakening. So our conclusion, the S&P is trying to turn positive, but declining after becoming specifically short-term overbought, as well as hitting resistance. And that's the same thing for the short term. Intermediate term could be looking at becoming more overbought if we see some more advances. Long term, even though we have some oversold indicators, it takes a lot for those things to move. And as long as we're below that 200-day simple moving average, we are still negative. So thank you. Have a wonderful Thursday. We'll look over things, see if there's a note of doing a video for Friday's session. In spite of that, have a great day anyway.